So on today's weekly recap, right? I managed to take one trade, which was on Friday. It was my second highest reward trade. I risked 0.2% on it. It gave me 4.2. So it was one of those entries, the highest probability SMD. No emotions, maybe a little bit, but here's how it looked like. I'm gonna show you in the actual charts. View. Let me go to the 1 minute. Which is surprisingly to give me this kind of a good trade because today is October, we're in October Q4 and usually this type of trades don't happen this month. But anyways, this is how it was. Frankfurt sweat medium or major. From here you get SFT with the in London Open on EU. This one induced what this one did. Yeah, so here was a bit of equity inducement SMT over here, and it broke this actual market shift. It pulled back and entered somewhere around here, and I targeted this low. This one. I was gonna target this low, but thank God I wasn't that greedy because I mean, as you can see, it's completely reversed. But here's the one thing I wanna point out. So obviously, I know the law of if something is taken, if the other correlated pair has taken a certain objective, the other pair doesn't have to. But since this one is a high probability efficiency, and EU, the one on EU is something like this, it wasn't high probability efficiency, but it was already taken, right? Since this one is high probability efficiency, does that also apply with these type of market scenarios? Which obviously, as I can see now, I guess it does because it did trace back to it. Yeah, it just went nowhere and then kept on ending model. So yeah. But anyways, this week's last week's week market was really good. Even though, hold up. Sorry. Anyways, I expect it to be bearish for this weekend. As you can see from this post, I said after maybe taking this high, we can deliver bearish. But I also mentioned there is a way for us to go bullish. If, as you can see here, I said that if it takes this low, but as you can see from here, it took this external low, which I should have probably also mentioned. As taken this low, it just went higher. So as you can see, it took this external low, and then from here, it started delivering strongly for bullish as instead of for bearish like I expected. But it also went to this high that I mentioned it's gonna take if we deliver bullish, as you can see from here. I marked this high if we start delivering for bullish, and it took it to the paper that on Friday it started delivering bearish. But this weekend, there was also one more entry model which I didn't take because I wasn't so sure of it. It was over here. So from here, I reiterated off an API of an efficient price action. Let's mark it like this, right? So when market was creating this build-up, right? And when you induced it, I thought it might induce this low as well as Frankfurt low for us to, for London to sweep it, so we can be even a higher probability to trade. But apparently, we already made a reverse EPA in the 1 minute time frame. That's what you can see because in the 3 minutes, but you can reverse EPA build up liquidity. So that's why I'm assuming this low wasn't gonna get reinduced, and I should have probably entered on here. When it swept this, I should have probably entered from here, somewhere around here, 5 pip, and then, but if not, but I was waiting for this to get broken to get this, to make this a protected, and when it did, I was waiting for another entry model from here, not realizing I was good to go to enter somewhere, around here, when it came a pullback. Actually, this would have been a bigger stop loss, so maybe not. Yeah, maybe never mind. Anyways, I could have at least entered somewhere or after sweeping this pullback, but I did capitalism because I thought this was gonna get reinduced. But yeah, that's it for this weekend. I should have learned from that, and yeah, we got a nice 1:4 trade this week.